further deterioration. You've got not only Greece to deal with, all of them are facing some real issues dealing with debt. No real apparent solution, or none that is palatable. They've tried attempts at austerity measures, and as they have tried attempts at austerity measures, all of a sudden you get the reactions from people want to accept what the government is suggesting that perhaps they should accept. And they've had some strikes and other protests from 1962. There's no easy road, no easy problems that we're facing. I know Germany and France had a plan, and they've tried to prop up the value of the euro, but propping up goes so far. You may recall the past attempt to prop it in the 80s, and what the result of that was as a pound collapse. These have been under pressure ever since going to the euro, and they've been European Union membership, and it may not be a good surprise in the latter half of this year for some of the nations, and may even drop out of the euro, and that the euro would make, and perhaps could occur this fall when a lot of the market moving events are. Again, that's other than kind of pure opinion, but that's just one person's view, and you may have other views of your own. Another surprise to a lot of different people in the first half of 2010 has been the stock market, represented here by the S&P 500 index, the E-mini. We talked in an earlier webinar, and we had in March 2009. We came off of those lows. We've been generally in an overall uptrend, but then we had January effect in this time period right in here, where things kind of hit the skids for a little while, kind of a disaster for you had a 401k or IRA, but since then the market has rebounded, turned back up, set new highs, and again I think this probably extended. Other people would have guessed that it might have. I know we have again here, we mentioned before the flash crash. Well, we have the flash crash day right here, which is kind of a big candle that you see. That's a real aberration in the whole market scene. But these big moves, when we talk about surprises, that could be a surprise that is no surprise, because it's undoubtedly to happen again at some point, even in 2010. We have had more moves of 5% in stock indexes or more than I think since the 1930s, if I recall correctly, according to that. Now, beyond the E-mini, we're going to look at just a couple of others real quickly, kind of the overall big picture, but we turn to kind of the look at what we have today. You look at the chart here, the continuous gold futures chart, and it is moving, as you can see. The general direction is moving to the upside. But the question here is, why didn't it maybe go more so? If everybody sees disaster and all the kinds of things that they talk about, with the surprise may be that gold prices didn't take off more than they did. Highs, we had our high earlier, and then we had our highs here where we have exceeded those highs. But if gold is truly indicative of the fear factor and whatever on with the underlying dollar scenario and other, hasn't accelerated like it is likely to do. At least one of the questions, I guess, that most people are asking is, everybody's talking about, because of the situation with, we should have high inflation, that should be the favor of gold. Hasn't happened. We're going to be wondering exactly what happened. When will that anticipated inflation come around? I know we have lots of evidence pointing to the fact that it is coming, but so far it looks like that it may not be the major factor of 2010 that some people are feared about. Could be another year or two. And of course, then you have another market that is kind of the barometer, and that is crude oil. Very choppy, probably from the standpoint, we've moved up, and we're at $147. We were at $35, generally moving up since then. Again, we've had kind of a sharp setback in this period of time more recently from May, but I think probably this is a good indication of a market is a swing trader delight. That's the kind of thing, if you're looking ahead to the last half of 2010, where you're probably not going to be able to find a good from both sides in 2010. I think nobody could predict what was going to happen with the British petroleum oil well explosion in the Gulf and the environmental disaster that of course cut out the oil market with restrictions on offshore drilling, and there could be other regulations come around. We don't have that may be a target. The energy markets could be affected by all of those. It's healthcare, they are probably not what everybody wanted, but as they are, and so you might want to be watching in the last half of 2010 for an effort to some kind of thing related to as it affects the energy market. And when you look at all these different kinds of news, you look at all these different types of events that are going on, all of these are fundamentals, and we hear them, we kind of get some perception of what is the depending on your bent, we kind of think, well, we're in real trouble. And then on the other hand, you think, well, we've made it through this before. If you're the optimist, it's good. We'll bumble through somehow. We don't really know, however, in getting this general impression of what the markets are doing, exactly what to do action and what kind of price action to expect is our software to analyze prices to find points that we can trust to take in the future with some. Again, we're not talking the last half of 2000, pretty much a short-term forecast. And if the market does something different, being in a position where and go with what the market tells us without sitting there stubbornly. So I have found that has been particularly useful for offering good clues for vantage point intermarket analysis software. I need to make it clear, I'm not a vantage point salesman. I don't sell a product. I don't receive money for selling a product. So I just want to make it clear that I'm intent on looking at trading and developing strategies, and not on just saying that I'm selling a particular type of software tool that has been helpful in analyzing markets. Excuse me. A couple of things about